This recording. I'm gonna go ahead and get the recording for you. And how was everybody's week? How was everybody's week, man? Guys killed it, right? You guys killed it, right? I already know. I already know that you did. I already know. So, first thing first, as far as the week goes, um, let's go here. Monday. GDP, retail sales on Tuesday. Powell speaking on Tuesday. We should get a move on Tuesday. CAD news on Wednesday. Not a lot of USD news. Unemployment claims, existing homes. We should probably get a nice little move on Thursday and Tuesday so far. Yeah, Thursday and Tuesday. And probably the opening on Sunday looks like it's going to probably give us the most, because the opening on Sunday was after we had this little push up that was right here. I mean, the close on Friday gave us this push up right here. So that's probably, we'll probably have some leftover from that. So yeah, that's looking like it'll be it as far as the big days. US 30 has been nice. Yeah, yeah. What's up, Christine? What's up, Chrissy? What's up, Anna? What's up? What's up? What's up? What's up? So looking at the charts, we've been, of course, bearish, but I think they may be trying to put a bottom in. And you look at the daily chart, I'm sorry, the weekly chart or the monthly. You can see on the weekly, we just traded into this order block right here on the weekly. Slides down candle right here. And we finally found some kind of support. So I don't know if this is necessarily ready to go, but this is a significant reason for a bottom around this area that we just made this bottom, because we would have came all the way down to this weekly order block. Now, could we go further? Here's another order block right here. And we actually pierced the high on this candles too. So we could technically say that we traded down into this weekly order block right here. Even though we missed the body, we got the wick on the candle here. And we would have came like pretty much right at the high, right? So for this, you can pretty much see we pretty much wicked the high. And we stayed, another thing to notice, we stayed on this trend right here as well. We stayed on this trend as we went down and touched into this order block on both. So that's something to note, how significant it is. We don't know yet, but like I said, I believe that they might be trying to price in a bottom going into it the next week and into the rest of this month, right? But we still got a lot of imbalances. We got a lot of things to deal with on the downside, right? The first thing you notice is this volume gap right here. This is a gap in price, right? This gap. And with this gap in price, is showing up on the weekly and the daily. So we already know that this is a big area of price resistance that we need to consider right here. So if we stay bullish, in order for us to stay bullish, this is going to be a key point that we need to trade through. You'll also notice that the monthly is right above it. This is where we open up for the month of May. That is going to act as a natural resistance as well. So we got two strong resistant points that we could be trading down to. This on our daily and our weekly look, right? You can see that imbalance, the volume gap right here. Again, you can see it right above the weekly as well. And more refined, you can, see it on the higher time frame. So basically we've been up for the month, dropped below for the month. And now our first thing we need to consider from the daily perspective is this. The next thing we would need to consider is this order block from the daily. So when I'm marking up my charts, this is how I go through, the beginning of the week and throughout the day as well. So I want to already know where have I been and where could I go, right? So where I've been is I was at this order block, I was at the monthly, I was at this gap in price, I was at the weekly, and then I came down to these lows. There's also some imbalances over here that I didn't mark up, but every time we got a wick right here and right here, those wicks happen at the imbalance levels, at certain imbalance levels. So I'm not going to mark it, but I'll just show you where it is. You can see it on a weekly. You see we have this imbalance on this candle to this candle. You measure the high of this candle, low of this candle, drag it out. You see where our first wick is right here. It's right in the middle of that imbalance right here. Once we started trading down, we came down to actually the first wick came right here after we traded down. Once we got into this imbalance right here, again, this first wick, we got a strong rejection right at the top, right around 4110.74. We traded up. There's an imbalance up here too, but we don't need to talk about that. But then once we traded all the way back down, the first time we got a strong wick rejection was right around here, 4078.5. And then it pushed back up. Then we finally traded through it until we got to our weekly order blocks, right? So that's just a quick look at that. But again, back on the daily, we've already came off of this low already. So what is this telling me? This is telling me higher time frame is still bearish, but lower time frame is in a buy to sell model, right? So everything below the daily should be telling us, and maybe the 4 hour, maybe everything after the daily should be telling us we are in a buy model. Like we can go ahead and look for buys, right? So let's check the 4 hour. Is that saying the same thing? Absolutely. 4 hours telling us that we can still be in a buy model right now. We had a shift in market structure right here. At this point, once we took out this little little bitty high right here and equal highs right here. And we had this impulse candle right here and we traded through. So we got some liquidity hanging around these areas right here. Right. And we traded up. So now what we need to look out for, once we get price open for the week, we got buyer liquidity here and here. We should go ahead and take these out, right? So that's how we know it still got room to go up, right? Could we get a pullback? We absolutely could. Absolutely could. From here, we already had this high. We could definitely pull back into this imbalance right here. Do we need to? I'm not sure yet because of how this bounced so hard off of this order block, right? But if we do pull back, this is where we're likely to pull back to, at worst case, down here at the body at 39. So we'll just draw this out to here if it's going to hold and still be a buy. We have this high that we still need to take out, and this high that we would still need to take out right here. So they're still showing signs at the moment that these two swing highs right here are holding liquidity here and here. So for us to say that this is done buying, we need to see one of these getting taken out right here and maybe push up into this before we can say we're done with this sell and look and start looking for a sell, right? Because we got so many things that we need to rectify before we can actually take another drop, right? Unless they just want to open this up and just drop it automatically. But as it stands right now, they may want to take this out, trade back into this weekly. They have the volume imbalance of the gap in price around this area monthly. And then we even got a daily order block around here. And that even, and on the 4 hour, you can see we got another imbalance right here that they might want to come up to. So we got a lot of things that are pointing to upside momentum going into this week. Still same thing on the hour, looking the same, pretty much the same. This rejection that we had right before the market closed on Friday implied to me that we still might have a lot of upside movement, right? Because we pushed up from this low without any type of pullbacks, without any type of retracements. We started consolidating around this high, right? We went ahead and took it out, traded back above it right here. And on the lower time frame, we had a shift in market structure right here to the upside. And we came back and traded back down into it to use this to continue up higher, right? And on this move up, it was really, I would say violent move up and down in that same couple hours just to come back to here and hold. So this is telling me, you know, hey, this is where they're going to continue this up. So before I'm looking for an actual sell, I already see that I need to take this high and take these highs out before we look for a sell. So this is a, you know, a heads up kind of way that you can say like what direction things are going and what to look for and what to expect and what to project, you know, moving forward, you know. And after that, you can take any kind of entry you want, you know, because you got a good idea of where things are going, right? If you want to take a break and retest, if you want to take a breakout, If you want to take a pullback at some point, you can do whatever you want to do as far as getting in. But the real thing that you want to take advantage of is just understand where are they trying to go and where are they likely trying to go. And noticing these kind of things will help you to do that, right? One of the biggest things on this pair is going to be, like I said, these liquidity pools. And we can look at as NAS now, and we're going to probably notice pretty much the same exact situation, right? We're following trend to the downside and upside on NAS. Let me get rid of this stuff right quick. Let's go to the weekly. See where our low is at an order block. Right here, we missed it. Just got the high of this order block, which means that it's reacting to a monthly because we're on the weekly. If we go to the monthly, you'll see probably a better body right there, but we don't have to do that. Same situation. We got a bunch of downside momentum, no gap in price on the weekly, not on the daily. So we kind of just reacting to this low, right? Order block right here. It's on the daily. So you can already see, right? Without drawing anything else, we just went from order block and headed towards another order block. So that's what you want to pay attention to. You want to see, like, all right, where's the last point of interest that I left from, and where is the point of interest I could be going to? Here's another point of interest for a short term right here. Buy side liquidity right here. These equal highs right here. It doesn't look great on the daily, but once we go to the lower time frames, you'll see how much cleaner that looks and why they will be coming here, because this is probably a short-term high on the lower time frame. So we already still see we bearish on the daily, weekly, monthly, and we are in a buy to sell model from this low that we just made at this order block to at least until we get to this bearish order block, right? So on the 4 hour, same thing, similar to SPX. We had this swing right here, our last shift in the market right here. This actually was our reaction, so this became change character right here. And we had this high taken out right here. And that's our shift to the upside. And you know that when you have a shift to the upside or to the downside, usually you will be reacting to some type of bullish point of interest or bearish point of interest. And when it breaks the high, it leaves a gap like it did right here. That's what you want to look for. And so if it does need to retrace from where it is right now, same as before, it would likely come to this gap right here, and worst case down to this order block, this last candle right here, at worst case. If it gets to that, if it retraces all the way down here, this would be the last place you could look for a buy, because at that point, it may want to take this low out and continue, right? But While we in here, that's your most pivotal buy area right here. If it does come down, this is at worst case. That's best case scenario if it stays in here. Worst case scenario, it pushes down to here, and you can look at it on the lower time frames and see if this gives you a reaction here. However, you got these equal highs right here. Got these equal highs. And this is always something juicy. So you see equal highs, it's probably gonna run it. It's probably gonna run the equal high. And we got this swing high right here, last up candle right here, just sitting juicy too. So it's probably gonna run this at some point too. So just looking at where we are, hey, we got a little order block right here. We got liquidity right here, equal highs right here, and we got bearish order block right here. So for now, you have to say and right now, because of the way this moved up, we are looking at buy to sell situations up to the point we get to here. Now, once again, when the market opens up, this could drop down, but for the moment, these are our most, likely targets right here going into the day open, because they just sitting there, just, waiting, to get taken out, right? And that's going to be probably where they're reaching for. So until we take one of these out, is equal highs or buy side liquidity, you have to stick with the idea that the likelihood of this coming back down, especially after having this shift and these hard wick rejections, is probably going to be a lot less lower for them to come back down, given this situation, that we have these pushing up. And like I said, right before the market closed, we had these strong buys right here. This strong buy was like on a Friday. This buy was on a Friday, and this buy was on a Friday. In the app, this will happen in the morning, and this will happen in the afternoon. So like that's kind of a little hint, like these fools up to something, right? What would give you a confirmation that it would keep dropping? Okay, that's a good question. So this is our last low, right? This is our last low. This is going to be our swing low right here. Now, if they're going to keep dropping this, they'll likely make another. This could be a swing low too. I'll add this too. This could be a swing low too. And this is where your short-term liquidity is, right? Your short-term liquidity is at these two locations, right? So this is short-term. If you see a situation where you see that price just blows through this, right? In this case, we would say this a bearish candle. It just blows through it, right? And this candle leaves this signature right here. It leaves this signature that I'm about to try to draw up right quick. Hang on. This signature that I'm trying to draw up with this is going to be what you need to look for. So this signature is gonna look something like this, right? It's gonna be open right here. Okay, so you're gonna have an up candle. You might have something, an up candle. That'll be your order block, right? Then you want to see down candle or up candle. It usually is going to be a down candle, but you want to see this low get taken out with a engulfing candle, right? And then once you see that the low is taken out with an engulfing candle, that's your shift in market structure, right? Once you get that shift, you want to see that this wick leaves this body open up until we get to this candle. That's going to create your imbalance right there. That means that everything in between here to here is offering only sell side, only sell side. Everything from this point to this point, with the combination of it taking out a low, is only offering sell side to this side of the market, right? So once you see that this low has been made, you will see price come back into this area, and you'll see that it either reacts to this, or this level. And it may, at worst case, react to the order block. In this case, though, because this is such a short-term low, I would rather see that this happens at this swing low and we get the shift in market structure right here before I say, hey, this is ready to keep going. And I would be, again, you could look to sell from this low or this low, or you can let it make a low, pull back, sell from here, and then your goal would be to take this low out, and whatever the next lows are, maybe this area right here, because then you're trading back to, you would be moving from now a fresh bearish point of interest to this bullish point of interest, which is an imbalance that we already mentioned already. That's a good question, Lexi. It's a really, really good question. So until we see this situation, and here's like a perfect example, right? We were going up to this point. We were going up. We were bullish, 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 bullish. Then we set equal highs, right? Then we got this little order block right here. We got a wick rejection. We got this swing low right here. And this swing low gave us the shift in market structure, right? And when we took this out, we left a gap, a huge gap, right? Here to here. You could have bought it too and sold it, but the sell was what you wanted though, right? Because when it traded back up into this, we got wicks at the high, we got rejections at the middle, and we got breaks at the low. And then we made a whole new low. We took this low out, we took this low out, and we took this low out. So, and made new lows over here as we kept going down until we came all the way down here, which is, this is actually the trade that I took on this day, but on SPX, and took it from here to below this low. I don't remember exactly, but now we in the situation in the opposite direction. So we just got to look for this on that, and that'll be our signal to say, all right, cool, this might still got some room to go down, right? And we can still see this downside movement if we break and take this low out with a situation just like this, right? So until then, if we don't get that, we have to deal with still moving up. We have to deal with the price still moving up to come to these targets right here, this equal high, this swing high right here, and then into that daily order block. So let me send this. I'm gonna send the charts all at the same time. So same situation on US 30. Same situation on US 30. Just look a little different. That's all it is. Weekly. It's funny because this is some old projections. And you see, like I didn't even like we already did this right here. We already projected where we could get our push-ups, and we were pretty much right on this from last week, right? But no need to talk and brag about nothing like that. But here we are. Let me get some of this stuff. Okay. See where our wick is? We slip below this imbalance right here and trade it into this order block right here on the weekly. So for US 30, it's actually held the best, actually. US 30 has actually held up the best, but it's still pushing down though. So, but it actually held up the best. So we had the weekly order block right here that it reacted to. Got our wick, same situation, bearish momentum to the downside, but lower time frames telling us we can buy until we reach into this order block. That's our weekly, daily order block. We should be looking for buy until we get to weekly, monthly order block, up on the lower time frames. Same situation, whereas we've had this wick low made, we had a shift in market structure right here. And we have a gap that's right here. Okay, we pretty much on here, we almost came down and reacted to it. That would have been a good sign, but we missed it by, what's the low on this candle? The low on this candle is 31,855.0. The low on this candle is 31,858.5. So it missed it by 3 pips, which is not something that I'm surprised by, because it's just getting forced up at this point. Everybody trying to dip by. So there's our swing high. First area we need to look for. Second, right here, that's your liquidity in the short term. And another like interesting about this is the way that this wick just rejected so hard right here. So this is lining up with this being the least probable situation. Now, like I said, it could definitely happen still. But the fact that we got that late surge in the market on Friday means somebody is willing to buy at this point. Somebody is, or some banks or some hedge funds or whatever the case is. And we still got our monthly and weekly. This is going to change though, but the monthly will still be there. And then we got our imbalance right here, aligned with an imbalance. We got an imbalance on the 4 hour inside of this daily order block to the downside. So as far as the buys goes, I would be looking to still be buyers up until this point. And at that point, I would have to reevaluate and make sure this is still looking likely the case. But if that is, then I'm looking at targets around here for the buy, this level, looking at targets here for buys, and then probably here just to, cut it short. But if it makes these two, it's definitely coming up to this bearish order block right here. And once we get above this, then this is where I'll need to reevaluate what's going on inside of this range right here between 33,200 to 33,858. Because at that point, then we could sell off again. But if we see this get filled and then trade back and hold inside of this, then that's when we have to say, all right, it's not ready to go. So let me just put that on there too. To the 1 hour. Let me go to the 4 hour. Clean this on there. Here is the same look, right? Same exact look. It's not a coincidence, It's not a coincidence. This worst case. Here, target here. Target here for sure. But at this point, then we reevaluate. Once we get above this high, we reevaluate that high at this point. Because at this point, we inside of this bearish point of interest, right? Same over here. Let's go 4 hour chart. Here's the worst case scenario. Coming here, a gap. Look for targets around here. And only difference on SPX is we got this gap. So we had a gap on SPX. So I would target inside of that gap somewhere instead of just this high. So like the difference in between those two, NAS and US 30 had a nice distance between the two areas of liquidity. This isn't so much. So they could run both of these highs at the same time just to get to this gap up here. So that's why we are looking at different targets up here. But overall, this would be what I would look for. So you could be a buyer above this if we break this using break and retest, or if it pulls back down here, you can look somewhere inside of this drop to see if we get a rejection and pull back. Or if we get that, and then you can buy down here and then look to target up here for the rest of the week. So here is SPX. Here is NAS. And here is US 30. And like we already see, like during the week, this is what we got to deal with. So you never know what's gonna happen on Monday, but so going into Sunday and Monday, because we could just have a crazy opening on Sunday, Monday, and this just goes and blows through everything, right? So that's what you can't project, right? Then Monday morning going into the New York Open and London Open, right? It's not a lot of news, so we might just have technicals or whatever. But Tuesday, that's for sure when we can get one of these moves to happen, for sure. Tuesday. Tuesday is what you want to look for. So like on last week, right? Going into last week, I really only traded on Tuesday. I think I only traded Tuesday and Wednesday and Tuesday and Wednesday, or Wednesday and let me see, or Wednesday and Thursday. Yeah, I think I only traded Wednesday and Thursday, but I only had to, I only needed to because I took the biggest moves of the week pretty much on those 2 days, right? I think on just those 2 days alone, I had over 2,000 pips. And it's the same thought process. Like went through the same logic, same thought process. So if y'all wondering why I haven't been dropping no trades or nothing, like that's why, because I haven't been able to call nothing because I was already in the trades already, and just every now and then I get to a certain level, I take some profit out, and just go about my business. I don't want to be on the charts trading every day, right? I do want to be on the charts every day, studying and analyzing. That's what I do want to do, right? I don't want to be trading like looking for every single swing. I want to look for the swings that I can get in and make the most pips, right? If I got in up here on uh like for SPX, right? I got in this trade right here. Why do I need to try to do anything else if I'm in up here, right? Or the other day I got in up here and it's just dropping. I don't need to do anything else, right? Do I use trailing stops? I do, but let me show you guys this. Like Alfredo, he used the trade assist, and I started using it too. So what I would do is I would just automatically set this as a target, this is a target, and then I would not move my stop loss until I broke a low. Or I wouldn't start trailing until I broke a low. So I would automatically, like example would be if this was my entry up here, I would take some profit right here and right here. And to give myself the room to stay in the trade, I would not move my stop loss into profit. I'll move it at break even, probably right here or right here. But I would move it to break even, at one of these points, and I wouldn't trail it down into profit unless it took this low out, because once it takes this low out, I know it has to make a new low. And that would have been right here where we made our first new low over here. So it just kind of depends on the situation. A rule of thumb you can use is um, use, once you go up 100 pips or 200 pips, you go ahead and move to break even. And then you just got to tell yourself, like, if it doesn't go at 100 to 200 pips, that means that I'm probably early, right? And you just have to be okay with break even on that, right? That's really the best way to think about it. Like, don't think about it as, oh, I just lost, or I just broke even, or I didn't win nothing. You technically, you did everything you were supposed to do. You technically did everything for the trade that you needed to do. Like, you got in at the moment you thought was right. You had a good stop loss, risk reward was good, and it at least went 1-to-1, or at least went 2-to-1. That's what you're supposed to look for. You're supposed to at least look for 2-to-1 on a setup. If it goes 2-to-1 and it comes back to break even, then it just probably means that you'll need to just reanalyze what you've already noticed, right? You think it's going to sell, or you think it's going to buy, but it may want to go higher, so then or it may want to go lower, so then you just got to look at it to say, like, okay, is it still going to go in the direction that I think it's going to go? And if you think that it is, where is the next place that it could be looking to buy or sell from? And then I'll go ahead and re-enter. And you don't have to feel like you did anything wrong because of the fact that you did everything right setting up the trade. You broke even on the trade. You've given away no emotional capital on this, right? No emotional capital. Your emotional capital needs to be protected just as much as your financial capital, because you don't want to go in a trade and just beat yourself up and be drained or whatever because you're thinking that you should have made a certain amount of money because you were up 200 pips and it came back and broke even. So what? So what? That's okay. That's how the market works. So it's how it works. That's what's supposed to happen. Sometimes you're not going to get the best entry, or sometimes you're going to get in early. And even when you do the right thing and try to hold it and let it go and see what's going on with it, sometimes it just don't play out that way, right? But here's dollar, 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 dollar. So dollar, right? Because of the inflation news, right? We are getting like significant moves to the upside, right? And on the weekly is what is coming after. It's coming after weekly targets right now. Like, I can't even get the screen to downsize like where I want to show. But so let me see. Maybe I'll have to do it on a monthly. So just like before, when I was mentioning, it's looking for targets, right? It's looking for, oh, dang, I was too far. Okay, it's looking for targets, right? Once we got this shift, we haven't came back down, right? Haven't come back down, right? We left this imbalance right here. We left an imbalance right here. We traded back into it and used that to keep going. But once it pushed up, took this high out, took this high out, right? And where did we come to? This order block. Where are we almost at? We almost at this order block right here at 105, 8, 810, right? So for me, this is monthly. So this could take a little while, right? But if I'm looking at the monthly, I'm saying, like, all right, it's taking this high out, it's taking this high out. It's nothing in between here that says this doesn't go into this order block. It's nothing, right? So on the monthly, I already got an idea, right? And if it does come back down on dollar, look at what we got to protect it. If it does come back down on dollar, if price comes back down, we have this imbalance that if it gets down into this acts as like a cushion almost before it goes and like, breaks all the way back down, right? Because we got this big cushion right here already. So if it does sell off, you can't project that it goes too much lower than that until you get an area to hold right here, right? And the way that this is pushing up right now, nothing's stopping it until it gets to this point. So you gotta assume dollar is trying to go 105, which it already has. It came to 105.17 already. And you gotta assume that, it's gonna want to get deeper into 105 and maybe come up to this, because this is something I already had drawn up. It's imbalance over here on the weekly, I think. No, it's on the monthly. See, there's your imbalance right here. And just like I told you before, this is your signature, right? There's your swing low. Here's just another swing low. There's your liquidity, right? This was your shift in market structure right here, right here, right? We got imbalance right here, imbalance right here, imbalance right here. And each time we got one here, this imbalance that got left between here and here took out a lower time frame low right here. This imbalance took out this low right here. This imbalance right here took out that low. And now we finally back up to this. This is years later. This is years later. This imbalance got left in 2002, which is crazy to think. And now we at the point in 2022, 20 years later, we coming up back in this area, possibly, right? So what does this mean, right? So if I'm looking at GU, if I'm looking at EU, if I'm looking at AU, markets are down, right? Markets are pushing down. And can you take a buy in some situations? You can, but your overall bias has to be neutral or it has to be bearish, because EU, GU, like those pairs are following what dollar does. They're following what dollar does. So let me see, is this the chart? Yep. It's a better view. Right? In this corner is GU. This corner is EU. Hold on 1 second. Yeah, sorry about that. So, all right. So we got dollar, right? Look what's going on with the pairs, right? So we got pairs with USD in the front, USD ZAR, USD CAD. They're following dollar. They're moving up. They're moving up. And they've been going up ever since April 5th, right? April 5th was, that's the 20th. Okay, so they've been going up since March 30th, right? And that's when we got this super huge run up on dollar, right? So here is GU and EU in the opposite, right? That's why anytime you take a trade on dollar, on GU, you need to watch this. So since the same time frame on the 30th, we've been selling off. 30th, we started selling off on GU. 30th, we started selling off on EU. And I always got to remind y'all this because I'll see y'all get in a trade and like, yeah, on the lower time frames. So we would be looking for, in this case, sell to buy models, right? Sell to buy, right? So if you see that, I'm sorry, if you're going to stay bearish on this, right, on GU and EU, you would be looking for buy to sell model. So your logic is, if I'm going to buy, where do I buy to so that I can get into the sell, overall sell? Or you just don't get in, right? You can buy it, but you need to say, okay, this is going to buy, but I know, given the circumstances, because we're so heavy on one side right now, if I do buy this, I would probably be better off getting into a buy to sell setup, right? So if we go to 15 minute, we got similar situations on this. Got a low. Here's our swing high. We got an imbalance. That's our shift in the market structure, right? And we even held up here. So we already know this high is a potential for us to come out of, right? We go up to the dollar, to the 4 hour, right? So that's our highs right here, right over here. We got a little imbalance right here, but then what do we have right here? We can't say we bearish, bullish, until we really get through this. You can't say that. And then coming over here, what do we got right here? Imbalance. Take out a low. That's another shift in the market, right? So as long as we below this, we have to assume that if we do buy it, we can be buyers until we get into here. Worst case, we come to the high. If we get into here and we don't sell off right here, and we get to this low right here and we hold this, that's when you need to reconsider. But up until this point, you could be buyers from here to here, right? Until we take this high out, until we get into here. And that's if dollar just don't keep swinging hard, right? This will be a similar setup for GU and EU, right? We go to GU. If we're gonna be buyers, you got to do it on the lower time frame. You already see that's your point of interest. There's an order block. There's your order block right here in the daily. We can be buyers until we get to that area. Then we got our shift in market structure right here. Continuation to the downside. And we have our imbalance right here that was left on the same candle that created it. And notice we buying, and inside of here we got relatively equal highs. So we targeting pretty much right inside the middle of this gap, right? Equal highs, right? we can buy until we take those highs out, or unless dollar comes up and does something incredible, right? Then if we get to this point and we keep going up, we still got to deal with this imbalance, still got to deal with this one, still got to deal with this one, right? So then that, that whole cycle starts over again. Like, where do we change our shift in, or where do we change the character of the market? All right. So if we get buys, this is where I'm seeing it. But I would rather you guys stay neutral to bearish, right? So if even if you don't get into buys in this area, look for where it's going to and try to sell once we get into this area if it gives you rejection. In the opposite circumstance is ZAR. If we're going to sell, we got to go to the weekly, right? Look where we at. Inside of this imbalance right here, we pretty much traded through it. So that means we taking out weekly levels right here. That's okay. I already see this order block right here. That's huge. Let me look at the monthly. Sheesh. This is just up and down. I don't want to believe this, but like, this is our order block. And if we go into this, we got a lot more room up on here, but I don't know if it's gonna do that at this point, but this is all balanced. So it could trade right through that. On the daily, we got this high and it pretty much came out to that. So let's see over here. This high, this high, this high. So this is pretty close to this one. So I'm just gonna say this high right here. And let's say this high right here. These equal highs right here. So this will be the liquidity we're looking for right here, here and here. And because it's so high, you can take, whatever situation you want to take to enter the trade, right? You can do a break above these highs right here. This high or this high. Let me take this off right quick. You can do a break above this high, or this high that it is right now. But your better scenario is to look for sell to buy. If it's going to stay bullish, that way you can get the biggest part of the move, where you will look for a price to come down first and give you an entry somewhere here to push up to take out these highs up into this high or this high. But let's just say here for now, because that's a more shorter term target. And on this day, you can see even at the end of the day, on Friday, we had in London, we had this big push up in London. Made this high in New York. And we pretty much held inside of this imbalance right here. Now, if we don't take this low out or this low out, we could still probably look to buy on this. So we could trade down to there at worst case. That's why I kind of drew this little line right here. This would be worst case scenario, right? And actually just looking at it now, this will be worst case scenario, right? Here, worst case scenario. If it's sold off right here, you can look to be a seller along here, but in your back of your head, you got to be like, oh man, this is a huge imbalance right here. And it's an order block right here. We could probably take these lows out, reject, and then continue to go up because we so bullish, right? So that's kind of got to be the thought process on that. So, and then on USD CAD, it's the same look, same situation. Same situation. Got some highs that we haven't been into for a long time. There's your swing. This is likely most obvious target right here. That's your liquidity. If dollar stay bullish, which I'm thinking that it is, we would have already came down. Here's a good example right here on CAD, USD CAD. We came down into the imbalance already. Now we need to figure out, are we going to hold, right? The weekly is right by the middle of the imbalance. If we can hold this, worst case we do is we drop down into this order block near monthly. We need to look for a price to hold around here. And then we can look for, we already in the short, somewhat of a sell to buy already. Sell down to here. Worst case, be middle here. And then we can look for the buy to continue to take this high out around here. If we take this low out right here, then we gotta, if it just keeps going and we take this low out, then we have to reevaluate because now it could come into this imbalance right here and this order block, and we got the yearly right here. So that'll be another situation too. But because dollar's so strong, I don't know if we come all the way down in here. But that would be the two scenarios that I would say right here. And then you can look to target over here. If we come all the way down here, you can look to target either here at this level or here at these highs right there at worst case. If you throw the fibs on that, this low to this high, that'll probably be like a 786, 618, 786, 618 entry. 80%, probably like 770 between a 618 and a 786 entry. At here is probably 618. Here is the 786, but let's just confirm. Here to here. Right on target. That's what it would be. 786. This is a 50%. Okay. So I was a little off of that, but roughly what you would expect, right? I'm going to send you this whole chart. So that way, anytime I make updates on this, you can see it and you don't have to worry about it. You can just get this. going into next week, right? The things that'll probably affect dollar is retail sales on Tuesday. Powell speaking on Tuesday. Monetary policy on Monday. That'll probably affect GU. That'll affect GU. This might affect EU economic forecast. So, a couple things. CPI on GDP on Wednesday. That's probably going to do something. I never traded this before, but because it's got something to do with financial stability, I would say that that would be something to look out for. These CAD, this will probably affect CAD. That's on Wednesday. So, and that'll probably be it. So, I went over everything. Going over everything. Anybody got any questions or?
I have a question, Corey.
Let's go.
Hey, okay, so question. When you're looking for your points of interest, you said you're looking from order block to order block.
Yeah, but not so much order block to order block. It could be any type of bearish or bullish point of interest, right?
Okay.
Sometimes the point of interest will be equal highs or equal lows, or sometimes it'll be an order block. Sometimes it'll be a gap. Let me send you this one chart.
Cause my confusion, I hold on one second. Wait, my when I'm marking, I look on the higher time frame sometimes from like 4 hours or the daily and down. But then when you come down to the lower time frames and you see those imbalance, like which one should you take in consideration first?
You have to go higher time frame first.
Okay.
But when saying that, let me send you this, right? There's gonna be situations where you still have to consider what the lower time frames are. And that goes into the concept I was just showing you guys about your lower time frame might be in a buy model, but your higher time frame might be in a sell. You get what I'm saying?
Yeah.
So like right now, lower time frame, right now, if we're looking at NAS right now, right?
Mhm.
NAS has a couple of points of interest, and I'm gonna just get rid of the drawings right quick, right? So on the daily, monthly, everything, right? We got an order block, right? That's the last time we sold, right? Was at this order block, right? We got a low right here and it rejected. It rejected at an order block, right? Or whatever the case, imbalance, right? It did react to the imbalance, right? So in this case, we went from order block to order block, right? But it's not going to always be the case where we go from order block to order block, because sometimes we don't reach the order block. We just come down to the imbalance like we did right here. In this case, this low was made at um, if we go to the monthly, let's go to the weekly. Yeah, that one did. That one did. Go to SPX. I know that one better. So in this case, on the weekly, right? This low that got made right here, it came into this imbalance right here. So this low, it left this order block, came to this imbalance right here. This high left this order block, came down to this order block. So sometimes it'll be order block to order block. Sometimes it'll be order block to imbalance. Sometimes it'll be imbalance to order block. So a good example of imbalance to order block is right here when we first sold, right? This was at the beginning of the year on the daily chart. Our imbalance was here, right? Hey, I missed this. I actually had this drawn up, and I think Anna was in it. I remember Anna got in this, but she didn't stay in Anna. As I remember. I don't even know if she's still on the call, but let's trade. Yeah, Anna's it. Because, right, here's your order block, here's your low, left the imbalance, made a new low, traded back up into the imbalance. We didn't go to the order block. We just came inside of this imbalance and we sold off and we kept going. We traded through all of this over here. And the first time we made a low, we traded through all of this and we made our low right here. We go over here to the left. We came all the way back down here just to come to this order block and finally stop moving. So in this case, this sell right here from here to here was order block to, imbalance to order block. Then once we came up from this low, where did we go? Let's see. We went from this low to here. What's over here in these two highs, right? Might need to go to lower time frame or a higher time frame, right? That's what happened. On the weekly, there was an imbalance. So we made this low, traded up from the order block this time to the weekly imbalance, which is right here to here. We overshot it a little bit, but you can see the body of the candles are inside of this area. That's okay, because this will happen sometimes. But the body, the majority of the body is inside of this imbalance. So in this case, we went from order block to imbalance. And you would have had 1, 2, 3, 4, 5 clean entries to get into this trade, right? Now we left in balance. We got our sell off. We took out all of this stuff over here, took this low out, came all the way down to weekly order block. So in this case, we went from imbalance to order block, right? And then once you get inside of the lower time frames, you just have to say, right? Okay, I know in the higher time frames, we have just gotten to a bullish order block, right? So for now, are we going to keep selling? I don't know. But overall, we are bearish. So on the lower time frames, hey, maybe I want to get in on a 5-minute, 15-minute, 1 hour. Is buying right now, right? And we have some shifts in the market structure right here and here. So if I want to get in right now, it's telling me that I can be a buyer at this point, because that we came down to bullish points of interest on the higher time frame. We've came down all the way down to just to go to bullish market points of interest. which are these two order blocks, right? So at this point, because I know it's come all the way down here to these areas, right? I can really say, okay, I can actually start looking for buys at this point because it's already rejecting. It's already rejecting, right? And because it's already rejecting, and I know that it's at weekly order blocks, right? I could probably throw in a buy in here at some point, because of that, I could throw a buy in here because I see that it's already pushing up, right? And I can either just do a break and retest, or I can wait for a pullback and then try to get in to go. But because I know that it is overall bearish on the daily, monthly, weekly, I know that once I get to new or fresh or old, however you want to look at it, bearish points of interest, like an order block or imbalance, I know I got to hit the brakes on my buying at that point, because I know I'm getting to an area that could have this big move like this just had at any given time. Got it? That makes sense? You there, Chris? Can y'all hear me?
Yes, we can hear you.
Oh, okay.
Mhm.
Okay. So, um, so yeah, like you really got to pay attention to, like, where you are in reference to. That's the biggest thing. Like, know where the bigger time frame points of interest are, because on the lower time frame, all it's doing is trying to get to those points of interest, right? Whatever it's doing on the higher time frame, look for the lower time frame to take you there, right? If I want to go to Atlanta from uh if I want to go to Savannah from uh from where I am right now, I got
Sorry, my stupid computer messed up.
oh, it's okay.
No, but I was saying, I can I was always marking up the higher time frame from like the higher daily 4 hour. And then what I think I was doing is I was missing the moves on the lower time frame of what it was doing, because I was thinking overall bias.
Yeah.
So you clarified what I was
Yeah.
confused.
You got to use it like you driving, right? Like, if I'm going to Atlanta, I still got to get on, if I'm going to Florida, I still got to get on I-75 to get to Florida, right? I still got to get off on exit 62 to get some gas or something like that. Even though the overall goal is to get to Florida, right? I still might have to make some stops along the way. I still might have to, do some things along the way to get to Florida before I actually start to sell, right? But you're just telling yourself that, if I have left a higher time frame point of interest, if it's bullish, then there's a likelihood that I need to be looking for bullish price action on the lower time frame. If I left a bearish point of interest on the higher time frame, then I can likely look for, I'm sorry, if I left a bearish point of interest on the lower time frame, then I'm probably going to disregard everything I just said. I just confused myself trying to get that out, but my bad. But just look at it like this. Um, Look at it like this. It sounded right, right? I sent y'all a chart that we can look at because I know I already talked about this before. But right, you either gonna be in a premium market, which means you're looking for sales, or you're gonna be in a discount market, which means you're looking for buys, right? And if you are in a higher time frame and you have one of these situations, looking for buys, right? You need to be looking for buys, right? And at these particular points of interest, right? If you are on the higher time frame, you're just looking for price to come down to that on the higher time frame. And then you're going to drop down to the lower time frame to look for the initial reaction, right? If you going up to a premium point of interest, you're looking for a price to get to that point on the higher time frame, but then you're going to the lower time frame to get the reaction. That's the better way to say it.
Can you show that like on the chart what you're saying?
Yeah. So I did actually. Okay, but I'll do it again. So, all right, so let me see what we got right here. Weekly outlook. So like in this case right here, this whole area from here to here, this is a weekly imbalance, right? Now, this is a weekly imbalance. So we are looking at a large range, right? This is from 44.55 to 45.81, right? And once we get right, we traded out of it right here and came back to this, right? Now, on the higher time frame, you're thinking, right, it should sell right here, right? It should sell at this point, right? But if we look at just this small area right here, on the higher time frame, we are expecting this to sell, but we don't get a signal that we should be selling until up here, over here, over here, and over here, right? But until we get to that point, we can still be buying, right? You know, up until, right? Like once we came into here, and this is a different situation in itself. So I'm gonna use this, right? Let me zoom in right here. I'm gonna use a cleaner situation. This one's cleaner. So let's use this because this overshot it, right? And you wanna, that was a lot of manipulation that week. But this area right here, if we just focusing on this, right? This is a daily chart, which is a lower time frame than a weekly, but on a weekly, this is a whole imbalance, right? And I'm gonna just show you right quick. This is the imbalance from this the start, that's the low, price came up, right? So I'm gonna annotate that price should come up in between here and here on my chart. Whether it does this on the weekly, daily, 1 hour, 15 minute, as it gets to these levels, I'm going to be looking and see what happens at the low of the imbalance, at the high, and at the middle, because I want to know, because I'm inside of this, there should be a point where I should have some kind of reaction at the high, middle, or low, right? The high, middle, or the low, I should have some kind of move that lets me know that I could probably take this for the sale that I'm expecting, right? So I'm on the daily, I'm on a 4 hour, right? Where do I get my signal, right? You know, here a low got taken out. I could have took this. There's a little imbalance right here. There was my first attempt. right? First entry attempt. We would have got this low taken out, but we never got this low taken out. And then guess what? Because we didn't have this low taken out, we already know this is a likelihood that this could come back up higher, right? That's a sign this could come up higher because our little imbalance was here. We traded into it here. We took this low out, but guess what's right here? Another imbalance, but this is an upside imbalance. And then we hold here. We don't go any further. We don't take this low out. So that means that now we can look to still be a buyer because we held a low. We pushed all the way to the top, filled it, came back, held a low. We could buy right here, or we could look to buy once we get a shift in the market, which was right here. And we look to buy it back up to the high. Now over here, this gave you a weird little crazy move right here. So this would have been a little rocky, but it still gave you the move, right? Because you would have got in the sell, sold down to here, came all the way back up to entry. It never broke the high though. And then you still could have sold it again, right? But if you didn't catch that, here it would have been your low. You got an imbalance left right here. This gave you the entry right here. It never traded above this. And then you can take that to continue, right? So here's a situation where on the lower time frames, from here to here, you could have been buying because it held inside of this imbalance. And then once we got to the high of the imbalance, that's where you could have been saying, okay, now I can be a seller from here because I've completed this whole buy model right here. I bought just so I could sell. And you breaking that down even further if you want to come to like the 15-minute chart. Cool. Same little area, right? We already see that it hit right here. Right? It held right here. This would have been our swing high right here. So it's our swing high. Right? We trade back down, right? Come back up here. We take this high out slightly, right? Now, if we don't just take, like, we got a lot of opportunities to get into this. We could have took it right here because that was a shift in market structure. There's an imbalance right there. We had another shift in market structure right here. That took out a swing high. And then notice this one, it took it out, even took this out, came back down and held this one. So there's another entry right here. And you would have at least been looking to take this out and you would have got that. We got continued price action here. We took out a bunch of highs right here. Then we got this little imbalance over here. And we never really traded above that. And then we got our sell-off. So on the higher time frame, you thinking, right? This is how you can like forward test. There's forward testing and then there's back testing. And you forward test by using these concepts, right? If we look at this chart, we can forward test like I showed y'all. Where was the chart before? I think when we first came to this chart, we already had levels drawn off and all that other kind of stuff, right? And you notice that because I back test just as much as I forward test, because if I know there's an imbalance somewhere on the higher time frame or on the lower or on the higher time frame, if I know there's equal lows, if I know there's equal highs, if I know there's swing highs and swing lows, you can pretty much assume that, you know, based off of the market flow, that at some point they're going to come and want to get this, just like they did right here. This was a swing low, this was a swing low, this was a swing low, right? This was an imbalance. They came back in here. This was an order block. They came back to there. They came back to here. This was an imbalance. They came back to here, right? This is an order block. Guess what they're going to need to do? They're going to have to come back to that. They came all the way from this area of imbalance all the way down to this weekly order block, and they left this weeks ago. They left this back in 2021. You know, do they always have to do that? No, but you add these concepts in and throw some fibs on there, and you can definitely get your projection. You know, like even with this high right here to this low, this put us right there into this imbalance right here. This put us right back. If we measured this on the daily from this high to this low, this would have gave us this level right here for the imbalance. I mean, for this order block, it would have gave us that, right? Just like -2.7, it gave us prices coming back down inside of this imbalance that was created on a weekly. The imbalances, that's another thing too. The imbalances and the order blocks, they line up with fib levels. Like they typically line up with the fib levels. And you can get all your entries either using the fibs, either using the order blocks, whatever the case is. Like you're always going to have something at one of the levels. Even the levels we don't trade from, there is still some type of order block, imbalance, equal highs, equal lows. Something is at those levels. It's always happens like that every single time, right? And it's not a coincidence, because a lot of the people don't know this, a lot of people don't understand, but most of the bots and most of the trading, the automated trading system are built off of fibs. So if we throw the regular fibs on here and we just analyze this move right here, just going up, right? We just look at that, right? Just this move. Here's the low at this low right here. The next level is 886. What's that 886? An imbalance got left right here. It never got filled, but there's an imbalance right there. Then the next level is 786. What's that 786? That's an order block right here. And from 786, it goes immediately through 70% and it leaves an imbalance right here, right around the 70%, right? Then the 618, that's an order block. And there's consolidation on the lower time frame. And there's an imbalance to get through that to get to 50%. 50% gets traded through with this imbalance, just completely through. We go completely through 50%. We go completely through 38. And we finally get a little move right around here, which is another level that I don't typically draw, but I'll put it on there anyway. But this level is 0.25. .25. Oh, I'm sorry. I was wrong on that. I guess that didn't react to level, so you can ignore that statement. That must be the 30, whatever. Anyway, consolidation around this high. But this happens just short of this level, right? This happening just short of this level because it needs to have an order block prior to that to get through this. And then we got imbalance, engulfing candle, imbalance, engulfing candle through the 23 up to the 12. We got consolidation between the 12 and the 1 and the 0. And then it repeats itself over again. This move down, bearish engulfing, order block. We're going to the downside now. This at 12.5 takes bearish engulfing candle. It trades straight through 23 just to go to the 382. We get some consolidation. We touch the 50. We hold around here. Then we go ahead and get the 618, 70%, 786. That's where we stop. Then we repeat it. We reject this, come through the 618. What's at the 618? Engulfing move to the upside, comes back down in it, holds it, goes to get the 50. The 50 leaves an order block to the upside, gets the 318, another little small imbalance, comes all the way back to 223 and rejects. Now we reach that point. We're going to repeat the cycle again. Order block, imbalance, imbalance, pauses, 618, rejection, push back up, 50%, rejection, imbalance, imbalance, take the low out, trade through, order block, imbalance, rejection at the order block, imbalance, take the low out, leave the imbalance, then price come back and it just repeat it. So if I'm measuring this from here, where can I project? I get here, 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 of course, and then here. And if I go over here, scroll over here at the 200, guess what's sitting right there? That's an order block. That's an imbalance. Sitting right along that area. So going into here, we already back tested. We know where it's been. Now, that's why I can say with some, level of confidence, all right, if we don't keep going up from here, we definitely come down into the imbalance / order block setup, right? If we hold that and we push up, you already know we come back to the high. We come to take these highs out. We come back to this point of interest, weekly, monthly, order block. So that's where we can say, if it comes here, we go here, because we know this is our higher time frame. If it doesn't come here, but it keeps going up, we still know it's coming here, because that's our last point of bearish interest. My fib levels are this. I have 3 or 4 different fibs. This is like the regular, just default fibs. I just changed it. Then if you want to get a screenshot real quick, that's just the default fibs. Then I have fibs to measure order blocks. That's this and this one. These two. Then I have fibs to measure imbalances. That's This one. The settings on these,
How do you get that one, Corey, without the 50, 0, and 100? That last one you just put.
right here. You just put these settings in, and then after you get it how you want it, you just save as whatever you want to put it as.
No, but it's only showing your price. How you get it like that? It's only show your price.
You change the right here.
Oh, okay.
Yeah. So you put the price right here versus the percentage or whatever. And then, you know, I use these two for order box. Then I'll use this one for imbalance. And then the last one I use is this for entries. That's this one right here. Because I'm usually only looking at 786, 70, and 618 for entries. And then I'm going to target 0, -27, -618, -100. The stop loss I would probably use, my stop losses are 100 and -27 usually. I usually won't let it go any more than that. And this looks like this. And I'll usually measure from my 100 is where I'm measuring where I'm from low to high if I'm looking for a buy, and from high to low if I'm looking for a sell, with the 100 as the first level. So in this case, I would have this looking for a buy. I would be looking for it to come here, push up, and then come back down to here and take a buy from there. If I was looking for a sell, I would be looking for it in the opposite. My whole 100 will be here. My 0 will be here. And then I will be looking for it to push up to my 786, 70, 618, and 50%.
I appreciate you going over those fibs, Corey, because I know Nasir was onto something with them fibs, but I had a clue what he was looking at.
Yeah. Yep, yep, yep. Yep, yep, yep. And you know, you know, you can just, like I said, save it as a template. So like anytime I want to switch, you know, I can just come in and just use my templates I already got saved on any one of them based off of what I'm using it for. Okay. I think that's it. I think that's it. If nobody got anything else, yeah, if nobody got anything else, just like I said, this is what I'm looking for this week. And you got my charts. Let me get y'all, I'll give y'all this too. This too. Save this chart, because that way you can always like go to this and see what I got going on. Like if you don't, if I update this, you'll see the update. Let me make sure it's saved so y'all can see this. Showing on. So y'all can see this anytime y'all want. Check this. Yeah. So you'll have this one, this outlook for the indices, this the outlook for dollar and dollar outlook pairs. So if y'all ever want to know what I'm thinking on the charts about the indices or dollar or whatever the case is. You can look at these too. And just have these saved or something like that. Cool. Okay.